this is now a place in the sun from my back garden. The sun is out, which is nice. And I wanted to speak to you all, as you know, I do property, and the government have put out basically a statement to say that there will be a 3-month mortgage holiday. But what does that mean exactly? Well, I'm in property, so I thought I'd give you a bit of an insight and speak to a good friend of mine, Adam Tahir, who's a mortgage advisor for Jigsaw Mortgages. So Adam, hello, how are you doing?
Yeah, I'm good. Working from home is actually a little bit joyous at the moment, so yeah, all good.
You've got your beautiful little girl, you've got your wifey, so you're all good?
Exactly, yeah, making the most of it while I can.
Okay, good. So we basically put out an Insta post, and we're getting people to send in some questions, queries, anything that they're not sure about when it comes to this mortgage holiday break, basically, that the government is giving us. So the first question, ultimately, the main question is, what is a mortgage holiday break?
So what it is essentially is a 3-month period. You don't have to use the full 3 months. You can do it for 1, 2 or 3 months. And it gives you an opportunity to basically cease payments on your mortgage for that period of time. Each lender is offering it at different stages. So to kind of give you an example, Halifax were doing it pretty much almost immediately from the announcement. TSB were a very close second as well. Santander took a little bit longer. Barclays are still kind of in the process of doing it at the moment as well. But what they're actually looking to do is, you're not going to be taking those payments off, as in once you take the break, you're still going to have to pay those payments at some point. So different lenders are doing different things. You can actually find that with Santander in particular, they're going to be taking the payments, stopping those 3 months for that period of time, and then recalculating it later on down the line. So you might find that in 3 months later, your payments are going to go up slightly.
Right.
Or you may find that your fixed product is going to be extended by 3 months. Either way, the lender is not going to want to lose that kind of interest at all. So at some point, you are going to have to pay it, and it's a very good probability that you're going to be paying it either a little bit more at the end of the 3-month break, or even have your term extended. But either way, you're going to have to pay it at some point.
So pretty much then, a holiday break, a mortgage holiday break, is 3 months pause, but that interest could potentially be added on to the next part of your mortgage, or that 3 months can go on the end. Is that right?
Absolutely.
Okay, so tell me then, the interest rates have changed. How does that affect mortgages?
So principally, if you're on a standard variable rate or a tracker, then you are going to see the decrease immediately, which is fantastic. You're going to see the payments drop, and pretty well as well. You're going to enjoy that for the moment, which is good. If you have a mortgage offer produced, so if you're in the process of buying something at the moment and you've got a mortgage offer produced and you haven't yet exchanged or completed, that rate will also drop slightly as well. So those people will benefit slightly. If you're in a fixed period, it's very likely that your rate's going to drop. So if you moved into your house 6 months ago or remortgaged 6 months ago, it's very unlikely that your mortgage rate is going to drop, because that's a fixed product. But ultimately, yeah, for this short period of time, if you are on a tracker or a standard variable rate, you're probably going to benefit from this right now.
Do you reckon now could be a good time to remortgage so you could take advantage of the lower rates?
All dependent on your financial position at the moment. So if you find that the 3-month holiday is not really going to help so much, it will help just for the temporary time that it is, and you can't really see the light at the end of the tunnel after the virus situation has passed, like getting back into work, earning money again, then yeah, absolutely, remortgaging yourself to an interest only, where you can actually minimize your outgoings for a period of time, fix it for 2 years, will definitely help over that period. So it'll allow you to kind of pay far less, kind of get yourself back on your feet properly, and allow you really kind of to get yourself going again, rather than having to panic and stress paying a full mortgage at this moment in time. It should also make a point and say that Barclays at the moment are offering an opportunity. If you are currently in a fixed rate mortgage, they're offering you an opportunity to flip it for 1 year on interest only.
Wow, okay, that's really good of them. Do you reckon you'll see other lenders doing the same?
Possibly, but Barclays have always been a little bit more generous in my opinion. I've always seen them offer always that little bit higher in terms of lending. They tend to usually be at the forefront from what I've seen when it comes to actually offering good rates. They're certainly fantastic on service as well, so yeah, possibly.
What are the best rates that are currently available for mortgages?
Well, at the moment, HSBC are offering below 1%, 0.99% on a tracker rate. So when you say that out loud, it sounds amazing right now, and you think, yeah, actually, I'd like a bit of that. And that is a phenomenal rate. It's the lowest it's ever been. But that is only temporary. You have to bear that in mind. It's very easy to get sucked into this 0.99 right now, but you also saw how quick the base rate dropped from 0.25 to 0.1. That happened in the space of a few days, and it could go back up just as quick. So accepting the 0.99 tracker rate right now sounds all good, but it's only a temporary fix. It could jump up in 3-4 months' time, and then you're going to be lumbered and having to refix yourself to another fixed product anyway. So just bear that in mind. But the average fixed product at the moment is anywhere between 1.1 to 1.3. Halifax and NatWest are sitting pretty much at the top of the list at the moment with that. So
would you say then now is a good time for people to buy a property, be it first-time buyer, be it an investment? What do you think?
Absolutely. So prior to me being an advisor, as you know, I used to be an estate agent myself. So I've worked through a previous recession. So if I think back to when the base rate was slashed back in 2008 and it went down to 0.25 back then, there was a small period of time where people were shaky. Obviously, there was negative equity that was flying around as well. But that bank base being slashed at that moment in time helped massively, because as we kind of went into 2009, I kid you not, I literally used to show up to properties and there'd be 40, 50 people waiting to buy properties. It would go to sealed bids. People became almost instant millionaires where their house prices practically went up by a third in the space of 6 months. So there is a whole generation behind the first-time buyers now who went through that, who know what to expect. So if I told you now that in the last week I've done more agreement in principles for new buyers than I did in the last 4 months of last year.
Wow.
So there's obviously something that's going on at the moment that people are aware of, because the trend and history has always shown us that the safest place to put money is into a UK property, because eventually, even though it may take a bit of a tumble, there's a very good chance that it will go down over the next year or so, but it always bounces back twice as hard. So the prices that you see now weren't what they were in 2007. The prices in 2007 weren't what they were in 1999. So, and it obviously goes all the way back. So it's definitely a good time to buy right now. You'll definitely benefit and take advantage of these low rates.
A great time to buy, but not a great time to sell.
That is a tricky one. It's not a great time to sell right now, but then obviously when the market does bounce back, then it will be a seller's market again. So I think you're quite right there. I think right now it's going to be more of a buyer's market at this moment in time. It has been for a while, but I think the tables are going to very quickly turn, possibly this year. I'm pretty certain it'll be by next year anyway.
So potentially this could be a really good time for first-time buyers. Do you reckon that's correct?
Absolutely. The thing is, because everyone's practically in a lockdown now anyway, it's going to be very hard for you to find any new properties online. Now would be the perfect time to actually start relisting properties from estate agents. So if I think over the Christmas period where everyone's pretty much indoors anyway, because a lot of people are at home, everyone's online, everyone's looking. So now's the time for people to be looking on Rightmove and Zoopla. A lot of the people who I'm dealing with at the moment are saying to me that they've found 4 or 5 properties that they want to view the very second that the market is open again, if you like, or the lockdown is kind of ended, if you like. So I think you're going to find as soon as there is a lift and this whole virus situation starts declining and becoming healthier again to walk around and be out and again in public, you're going to see a huge surge in new first-time buyers come through.
Okay, so first-time buyers, make sure you're ready. Keep an eye on Zoopla, Rightmove, prime location on the market, all of those. I'm always scrolling all of those. Okay, so, a question that did come in, it's quite funny. Can we put in any cheeky offers at this time? I love a cheeky offer. So
I've always been a fan of putting in an offer, but the first rule that you have to bear in mind whenever you're putting an offer in on a property is you have to be prepared to lose it. So it's all well and good where you want to go and do a viewing, you see a place that you like, you put forward the offer because you really like to get it for the deal that you want, but you have to be prepared to lose the property. So if you want it and you can't live without it and you can't see yourself being in any other place whatsoever, then just pay them what they want, as long as it's in the correct market strategy anyway, because a bank and a lender are always going to do their own valuation on the property anyhow. So even if you felt like as if you're overpaying for the property, if the bank don't feel for 1 second that you're actually paying the right price, they will simply downvalue the property anyway. So you will get it for that lower value and the seller will have no choice but to sell it for that lower value. But the whole art of negotiation is just making sure that at the first rule, you just be prepared to lose it, because you will end up losing it if you don't pay them what they want initially.
Okay, so don't be too cheeky, basically.
Be cheeky, try it. It's always worth asking. If you don't ask, you don't get. But at the same time, be prepared to pay the asking price for certain sellers who just won't move unless they get that price.
So, Adam, what about stamp duty breaks? Could you see this happening? Obviously, there's a certain amount of percentage you have to pay depending on how much the property is, depending on how many properties you own. Could you see the government maybe put in a break on stamp duty for a bit?
Honestly, I'd probably say no for the time being, only because you need transactions to go through to justify paying the stamp duty in the first place. And if there's no transactions, there's no stamp duty being paid. So I think that's something that they're probably going to monitor it. But where they've slashed everything else for the time being, and they're currently in the process of arranging support for self-employed workers at the moment, and obviously what they're doing for employed, I think they're going to need as much kind of income of tax as possible to help subsidise that. So I don't think I can see anything happening with stamp duty, but then I've seen stranger things happen, certainly with what's going on right now, so you never know.
Okay, cool. I'm going to head to the phone now because I've got some Insta DMs, so a few more that have been coming through, so let me have a little look-see at one. I think we've covered quite a bit there, actually, but let's just see what's come in. Quite a few of them have asked the same thing. If I take the 3-month break, is the interest rate going to go up afterwards? And will it be added to the end of their term, which we've covered? The one
thing with the mortgage break that you might want to make a point of is a lot of people have asked a question about their credit file and whether it actually affects their credit in some particular way. So in every lender has said the same thing universally, which is no, it won't affect your credit file whatsoever. And a few people are getting conflicting information. So the only thing I would say to you is if you go down the mortgage holiday route, just reaffirm with your lender that it's not going to affect your credit file. But also bear this in mind. If you get told from your lender over the phone, oh yeah, you're fine to go ahead and you've got a mortgage holiday, do not go straight to your bank and cancel the direct debit. Don't do that, because if you cancel it from your sides...
Oh, okay, sorry, go on. I was ahead of the game now. I was saying, do you need to get in writing as opposed to over the phone? But carry on. You're in full flow and I stopped you, sorry.
That's all right. So if you go and get the confirmation from your lender and then you actually go to your bank and cancel it and then you stop the payment from your side, then that could go against you as you missing a mortgage payment. So whereas if they cancel it from their side and put the hold on it, then it's them doing it. So just, again, reaffirm these things. When you're speaking to your lenders and you're confirming these points, make sure you ask, is my credit going to be affected? They'll probably tell you no immediately. Get them to confirm how they want to put the holiday in place, whether it's them stopping it on their side or you stopping it on your side. If they ask you to do it from your side, make sure you take every bit of detail of the person that you've spoken to, the time of the call, make sure the call's recorded so that you have a little bit of a case in case something goes wrong and you can always go back to them on it. But they should be doing it from their side rather than you from yours.
Okay, but just make sure that you have all of that checked out. Who's going to be doing it? Are they going to be putting the holiday break on? Are you going to be putting the holiday break on? Write down the name of the person, who you spoke to, the time, and check that the call's recorded so that you know you're covered either way there. Yeah, okay, that sounds pretty good. I mean, I think they were all the questions. Did you have anything else that you wanted to talk about or that you wanted to bring up and discuss?
Yeah, do you know what? I've got...
Sure as well. So most of the questions that came in were to do with the 3 months and will it just be a pause or will it have to be paid on the end, which you did clearly state at the beginning. If you take the 3-month break, potentially it will be added to the end of your term or the interest rate might go up to reclaim that money throughout that break, basically. But you need to check it with your mortgage provider, speak to them, see what they're offering. Also, buy-to-let mortgages, speak to your lender because they may be putting in breaks, they may not be. But ultimately, if you can afford to continue paying and not taking that 3-month holiday, it'll be better for you in the long run.
Yeah, absolutely. I mean, if you don't like the idea of paying the extra £15, £20 a month after the 3-month holiday because it's calculated that way, or if you end up adding the 3 months at the end of your fixed product and you're thinking, oh, the timing kind of goes out a bit for me because I'm hoping to move next summer and my mortgage is due to expire at that point, then there's no point in you doing it. You might as well try and survive if you can. But if it's a real struggle for you and you can't really see the light at the end of the tunnel just yet, then absolutely take it and then worry about the rest at a later point of time. But that £15, £20 a month is the difference between you having your Netflix account and not. So decide which one's more important.
And I think a roof over the head is more important myself.
Exactly.
Let's see what else. People are asking about specific mortgage lenders, but obviously you need to speak to them directly. I think that is everything. I mean, it's been quite a whirlwind, and obviously this is new to everybody. This has never happened before. Everybody's feeling their way. You know, banks are trying to do what they can to help people, which I think is fantastic. And we just have to keep on top of all the news that's coming in. Anything that you find out, Adam, let me know, and I can post it and let people know, you know, the latest, what the updates are. But I think ultimately, as you've said, if you cannot take the 3-month break, great. But if you have to do it, by all means, speak to your lender and see what you can do.
Yeah, absolutely. Just the only other thing I would say is don't be afraid to reach out to either myself as an advisor, you for an update, or anyone that is actually in this industry that you could think, actually, is it worth me just asking this question? Because in this scenario here, you can get it wrong if you don't ask the right questions. So sending someone a DM or sending me a DM really quickly saying, Adam, really quickly, can I ask this question, will enable you to be a little bit clearer on how you approach a scenario. Every person's financial situation is different, everyone. So every bit of advice that I give one person about a particular lender will not be the same for another. So don't put yourself in a position where you see a friend who's just done it because they're doing it, and all of a sudden you think, oh, actually, that will work for me. Your circumstances are going to be very, very different compared to theirs. So it's always worth just reaching out to an advisor first, someone who knows what they're doing with the ear to the ground, speaking to the banks on a regular basis. And then that way you can kind of step into the scenario knowing exactly, with open eyes, if you like, rather than actually thinking to yourself, oh, what have I done? Is it a bit of a risk?
Yeah, and I guess no question is too silly, too stupid.
None.
Just ask the question, no matter how small, how big, get the answer, and make sure you're clear before you make any
Absolutely.
movements.
No such thing as a silly or trivial question when it comes to property. It's way too important. So it doesn't matter how silly you think it is, ask it. It's always worth asking.
Yes. Perfect. Thanks so much, Adam. It's been a pleasure talking to you. I'm sorry about the wind and the dog. Got my neighbour as well behind me having a little chat on the phone, but I feel like we've got loads of information out there. Anything else that comes up, I'll definitely send you a message. Instagram, if you have any questions, I'm going to make sure I tag Adam, so get in touch with him, get in touch with me if you want, and I can speak to Adam on your behalf. If you are a first-time buyer and you're looking into getting some properties, make sure you speak to Adam. And yeah, hopefully that was really helpful for you.